Top-down analysis. What is it? How do we do it? And why do we do it? Well, in this video, I'm going to show you exactly how to perform a proper top-down analysis on your charts, which is going to lead you to be able to accurately understand what's really going on behind the market. And it's actually the reason behind a lot of people's losses. Most people take trades that they probably shouldn't have taken. And that is all because they've just simply failed to read the market direction and failed to understand what's really going on behind the market. Now, the market is one of those things that will give you clues and will let you know what is going on with the market, or it will let you know what it wants to do. And it's our job as traders to dissect that, read it, and sort of read between the lines as to what is actually going on. Now, I like to refer to the market as a little bit of a book that's written in a different language. If you don't understand the language, you're going to find it really, really hard to know what's going on. But if you do know the language, it's actually really easy to pick up on, and that's going to allow you to, like I said, read between the lines and understand what the market is trying to tell you it wants to do, rather than you imposing what you want the market to do, if that makes sense. Well, top-down analysis really is what it says on the tin. It's working your way from the higher time frames, so like the 4-hour or the daily, right down to maybe the 30-minute or the 5-minute or the time frame that you actually trade on. Now that's going to allow you to come up with a bias for the market direction, and once you know that, you're then going to be able to understand whether you're in a position to take a buy or take a sell trade. Why is that important? Well, the higher time frames do what we call carry more weight behind them. So the structure and the trend on the higher time frame tends to be more reliable because it's taken longer to play out, rather than going down all the way down on the 5-minute chart and trying to identify trend and the direction of the market on that, because that can be very choppy, and the trends on that can change within the space of half an hour. Whereas the trend on the daily or the 4-hour time frame may have taken 2, 3, or even 4 weeks to play out. Now the weight behind that is naturally going to make it a lot more reliable for us to trade with it rather than against it. All we're going to be doing today is keeping it really, really simple. We're going to be focusing on 1 or 2 higher time frames and the time frame that we actually trade, which is the 30-minute. So without further ado, let's get into it. I'm going to turn to the charts and we're going to go through we're going to go through a top-down analysis first together, and then I'm going to show you a few examples of where top-down analysis has been incredibly important and has actually been the deciding factor as to whether we have taken or haven't taken a certain trade. So we're going to start by going through a top-down analysis together, and I'm going to be using an actual live example that's playing out right now, and we're going to be going through GBPCAD. And I'm going to start by going on the higher time frames, and then I'm going to work my way down to the 30-minute time frame, which is actually where we'd look for our entry point and our strategy. So when we do top-down analysis, there's 3 things that we are really looking for. Firstly, we're looking at trend. So we're trying to look at where we're creating higher highs or higher lows, or lower highs and lower lows. So what I mean there is, are we in a bullish trend or are we in a bearish trend? And secondly, what we're looking for is supply and demand zones. Now, these aren't necessarily liquidity supply and demand zones. They can be normal supply and demand zones as well. Now, the reason we look for those is because we need to understand whether we're likely to react from a supply or demand zone in comparison to where we are within the trend, if that makes sense. So if we're in a bearish trend and we're coming down, but we're coming down towards a very, very strong demand zone, we're naturally not going to want to trade through that demand zone because we're expecting a reaction from it. So that's where we have to sort of make sure we're aligned with it and we're not trading against it. And the final thing is we're looking for our strategy. We're looking for our entry points. Now, we do that on 3 different time frames. Now, naturally, what I like to do, I like to get a bigger picture. So I know when I was having this conversation with my brother, he likes to keep things very simple, and you can too at home. You can just use the 4-hour and the 30-minute. Well, I like to have the bigger picture, so I like to look at the daily as well. Now, what I'm going to do here is we're on GBPCAD, as you can see, and what I'm looking at here is I'm not really taking too much from this. I'm just here to see what the trend is doing. I'm just trying to identify the range that we're currently trading within and where I'm expecting to see price go in the immediate future. So you can see here, I'm going to take some of my path drawings out for you. And at the moment, we have this trend going on here on the daily time frame. And with this, it's very important that you can understand market structure. And like I said at the start, it's like a bit like a book that's written in a different language. Once you understand the language, it's very easy to pick up on. But if you don't, it can be one of those things where you don't know it kind of thing. But you can see here, at the moment, we are on the lower time frame, or specifically when we go down in a minute, you'll see that we're pretty much in this corrective leg of price action where we've just had this impulse down and we're currently in this corrective phase. But what's important to know about this corrective phase is that where it is. So we're going to get to that in a minute. But at the moment, we are trading within this range here. So our two most recent highs and lows within this bullish structure, so this bullish structure here, are this one and this one. So if this trend is to carry on, we are expecting now price to come up to here and break this high. So that gives us a good idea of where price is likely to go in the short to medium term. And you can see in this most recent leg of price action here, we've come down. There's no real imbalance left to fill on it. So I'm not expecting us to go any lower from here. I'm expecting us to really come up to here now and continue on with this trend. So that gives me a good idea of what's just happening. Like I say, I'm not going to let this dictate the trade I take. I'm just doing this so I can get the bigger picture of what's actually happening. And hopefully that when I go down the time frames, that what I'm looking at here, it will all align. And then if they do all align and I find my entry point, it's almost like the perfect trade. So the next thing we're going to go down to is we know the range that we're currently trading in. And I'm going to go down to the 4 hour now. And what the 4 hour is going to do is we're just going to focus on this bit of price action here. So the corrective phase that we're currently in. Now, when we come down to the 4 hour, you can see, although it does look pretty messy and a beginner trader might look at this and think, what on earth is going on? There is still clues and a bias to be picked up within this. And let me show you. Now, like I said, although this is the corrective part of the move, it is still bullish. So we're currently doing higher highs and higher lows like this. Now, we have just broke this low here, but that doesn't necessarily mean a change in trend. We need to see where we are within that. Now, if we zoom in, we will understand that this isn't in fact a change in trend. It is just to come and fill this demand zone, down here. Now, what does that tell us? Although the 4 hour is fairly messy, it is still bullish and we are coming off a very prominent demand zone. Now, if we tie that in with what we looked at on the daily, we're bullish on the daily, we're bullish on the 4 hour time frame, and we're coming off a big demand zone now. So naturally speaking, once we go down to the 30 minute, we're going to be looking for our entry point to start looking for buys rather than sells. Now, if I zoom right in here, you might think if we hadn't have uncovered this almost story, if you like, a trader might come in here and think, right, we've broken this low here, we're in a downtrend, I'm going to take a sell. But because we've built up this story and this bias of what's actually happening, we know that instead of taking a sell here, we're going to be looking for buys. Now, when we come down to the 30 minute, at the moment, we've already established the daily is bullish, the 4 hour is bullish. The 30 minute, which is the time frame we actually trade on, isn't quite yet. The 30 minute at the moment is in that downtrend that we just looked at on the 4 hour. So what we need to wait for at the moment is confirmation that we're going to go bullish. And that confirmation is where it then will align with the 4 hour and daily and we can take the trade. So at the moment, we are bearish. And at the moment, this bit of price action here is just very messy. It's very corrective. Now, had I have done this about 2 hours ago, I would have been looking for price to break this high here because it's the most recent high of this downward trend. And once we break that high, that's confirmation of a trend change and we can then trade with it. But literally in the last hour or so, we have now broke this low. So that makes this high the most recent high of the trend, of the downtrend. Now we're looking for price to now break this point because this is now the most recent high of this downward trend. So what we're looking for is price to come above this point, break past it confidently, and then we're going to look for some liquidity, break that liquidity, the return to the zone, which at this point would be, hopefully we'll see a zone here somewhere, or it may be as long as we've broken that. As long as I've broken this high here, it doesn't really matter where the zone is. As long as we've broken this high, that's all we're really looking for. Then once we've done that, we look for our setup and then we take the trade to go bullish. And obviously our target would be firstly this high and maybe even a 1 to 10 depending on what we've got to the left. So for now, our high would be a 1 to 7 if this is how it played out. So that's basically how we do a proper top-down analysis. And we've only used 3 time frames. You can, if you want to, you can not use the daily at all. You can get everything you need to know off of the 4-hour and the 30-minute. And if you're new to it, I would almost recommend doing that. But in my personal opinion, I prefer just to get that little bit of extra information from the daily time frame and then work my way down from that. But like I said, you can see here where if you were a beginner trader and you didn't do a top-down analysis, if we were looking at just this price action here, you'd think, right, we're in a bearish trend, we're going to be looking for sales. Well, that's not actually the case. Because we've built up that picture in our heads and we've sort of picked up on all the clues that the market has left us, we now know that all the higher time frames are bullish. So what we're waiting for is, rather than taking sells, we're waiting for the confirmation to go bullish to take buys instead. So that's where you can see, by doing that analysis, it's going to give you that proper edge over making sure your bias is correct and making sure that you've really picked up all the clues that the market has left behind. Because like I say, once you understand the language, it's like reading an open book. You can really understand what's going on, and that's where your trading is going to take it to the next level. Now, like I said, I'm going to show you an example now of where this trade here, I remember it very, very well, and it didn't actually happen too long ago. The entry, or the trade itself, was actually the 24th of November of last year, so it actually wasn't that long ago. And the reason I remember it well is because I had just done a top-down analysis on this gold trade, and without sort of sending the context behind that, I sent the trade or the setup to my brother. Rightly so, he got back to me very quickly and say, no, that trade looks very bearish, I'm not taking any buys there. Well, and then I sent him the context behind it, and he was actually like, oh yeah, that setup's actually pretty good. We ended up taking the trade and it ended up winning. So I'm going to show you how we did a top-down analysis, or I did a top-down analysis on this gold trade, sorry, for a 5-minute trade. Now I'm going to show you the exact context behind this trade that I sent my brother, and is the reason that we actually ended up taking the trade. Now, if I remove all of these drawings off here first, I will show you what I mean. If you look at this trade from face value, you're going to think, right, hang on, what we've got here, we're making higher highs, higher lows, right? So you're going to think, right, we're in a bearish market here. Why would you take any buys? Now, here's where, if you pick up on the clues that have been left behind and you actually read what the market is doing, you'd actually realise this is a very good place for a buy rather than taking a sell. Now, let me take you through the context. So, now if I zoom out to the 4-hour, you're going to see that what we've got here is, it actually looks very, very messy. And at the moment, this piece of price action here is what everyone is looking at. But if you zoom out and come out to the 4-hour, you'll understand what's going on. Although we look very bearish, actually all the signs are there to tell us that we're going bullish. First sign is that we've got this huge demand zone at the bottom here. Not only that, we have another demand zone at the bottom here. So why would this downward trend continue when we've just reacted off 2 very, very key demand zones? And not a lot of people picked up on that. And when I did my top-down analysis, I saw those straight away. Now, again, if I go down to the 30-minute, it lines up again. So I'm going to leave that drawn there for the moment, go down to the 30-minute, and you'll see again. Well, what do we have? Well, at the moment, again, if you didn't look at any of the zones, we have this downward trend, right? So naturally, you'd expect this trend to continue down here somewhere and so on. But if you draw your demand zones again, you'll find that we're reacting off this demand zone again. So we've filled all of this imbalance. There's no reason for this to come any lower because we've filled all the imbalances below it. We've reacted off all of the demand zones that we need to react off. And that's our cue to really go bullish. So the 4 hour, we've reacted off 2 big demand zones. And the 30-minute aligns with that by reacting off another demand zone. So that's why when people look at this and thought, hang on, that's a bearish trade, why would I take a buy there? Well, if you look at it properly, all the signs are there. It's giving you, the market is telling you what it's going to do by reacting off these zones. And if you go down to the 5-minute and look at the time frame that we're actually trading on, you'll understand that we've got this downward trend. We've broke the most recent high here. And now we're at the point of making higher highs and higher lows. We've got our demand zone here. We've reacted off it perfectly. We've got our first candle close. If I zoom in a bit more so you can see it, we've got our first candle close, and we would have been targeting a 1 to 4 there. And if I quickly play this forward, you will see that it's an easy 1 to 4. And that's a trade where if you hadn't have done that analysis, you'd have missed it. You wouldn't have capitalized on the 1 to 4. And if I zoom out again and really play this forward, you will see that the analysis behind it was actually really correct, and we are going very, very bullish. So if I continue playing this forward, we're now going bullish, and this move could have ended up being a 1 to 10, 1 to 20, whatever you want, because it just kept going. And that's the point that I'm trying to get across to you guys, that all the signs were there that this was going to happen. People just didn't pick up at it at the time. And that's the power of doing a proper top-down analysis. So if you enjoyed that video, don't forget to like and subscribe to the channel and comment below, because I love to hear your feedback, especially as the channel is so new. And if you can give me any feedback on how to improve on these videos, and comment what you want to see, and hopefully we can get around to making content on that as well. So as always, we have our Discord. I'll leave a link to that in the description, so do go and check it out. It's free at the moment, so come and chat with us, come and trade with us, and we just generally have a really good time in there. So make sure you check that out, and as always, like, subscribe, and I will see you next time.